From Wall Street to Dalal Street, tech stocks are feeling the heat. A mix of valuation worries, slowing demand, and a rethink on AI-led growth has triggered a sharp sell-off. So what exactly spooked investors and why now? Here's a quick explainer to break it down for you. Well, it's been a weak start to February across most global markets. Some of the broader indices have managed to hold on to green, but it's the tech pack which continues to see heavy selling, whether it's Nasdaq on Wall Street or the Nifty Tech Index back home. Yesterday, chip makers and other tech giants joined battered software makers in falling. Now, before we get to numbers, first up, let's take a quick look at what really led to this bloodbath for it and what is being called the SaaSpocalypse, the primary catalyst in the recent launch of new AI tools by Anthropic's Claude Cowork. Well, why is this a concern world over? It's because these tools are not just being seen as assistants, but as frameworks that are designed as end-to-end automation agents. Hence, investors are concerned that this may eventually replace human labor for coding, legal review, and data handling. Sure, this would make a task easier, but markets are worried about seed-based pricing that prevails in the tech sector. If AI reduces the number of human users needed, software companies that charge per user may see massive revenue drops. All of this is driving the big overall tech sell-off alongside the key concerns over tech valuations that continue to be stretched and macro concerns, including rising U.S. Treasury yields and uncertainty over Fed interest rate paths, are also dampening the sentiment. How have the markets taken these developments? Now, to understand that, we need to first take a look at the tech stocks in their portfolio, and they will tell you the answer is not very well. The tech sell-off on Wall Street continued for the second straight day overnight, which takes the two-day Nasdaq fall to nearly 700 points. In fact, analysts estimate over $280 billion has already been eroded in global market value a single session yesterday. Meanwhile, underwhelming forecasts from semiconductor giants like AMD are also adding to the risk of sentiment. The trend mirrored back home as well, where the Nifty is plunged about 6% Wednesday, which is the worst single-day fall since March 2020. This sell-off erased nearly 2 lakh crore rupees from total market capitalization of India's top tech stock. However, seeing a slight breather for some large caps like Infosys, TCS and Wipro. However, small and mid-cap stocks continue to be under pressure. Now, just to brief you on how this SaaSpocalypse impacts Indian tech companies. Remember, India is a massive tech services exporter, and we have heavy reliance on manpower-driven outsourcing models. And hence, billable hours are at risk. If AI tools like Claude Code can do the work of 10 engineers, the billable hours model collapse. Therefore, the panic among investors fall from that. ADR pressure is continuously being seen as the sell-off began overnight in the US itself. Now, it will be interesting to see if and how software companies turn the tide in their favor amid this AI disruption.